Today is Monday, June 18th, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Dano's Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADMIS's Senior Financial Economist. Steve, let's start with the grains. Soybeans, soy meal, and corn futures continue to slide lower. Why have prices dropped so much, and will this continue?
I think the soybean prices have dropped because of the trade issues between U.S. and China. China announced that they will retaliate and put tariffs on $36 billion of U.S. goods, and that'll go into effect July 6th when the tariffs for the U.S. on China goes into effect. So basically the market's thinking that China will now start sourcing more soybeans out of South America, and that we'll lose export share. We also have NAFTA talks that are stalling, and Mexico's talking about retaliating against U.S. corn. So all these issues is bringing speculators out of their long positions and actually now going short. And will it continue? I think it will, as long as there's these tariffs imposed.
So it's obvious that these trade wars are negative to prices. How low, how negative can it really be?
You know, the question was asked last week. It was asked again this morning. You know, we're trading around $3.50 corn. Some people say, can corn go down to $3? And the answer is it could if we disrupt trade and if we have a good crop. I mean, the big unknown is having a good crop. And the soybean prices are at $9. Can they go down to below $8.50? Yes, if we lose this demand.
USDA June U.S. World and Supply and Demand report was friendly. Why did the market not trade that? Is it just simply the trade wars are overriding factor?
I think that's part of it. I also think that some of the USDA numbers are wrong. They show China stocks around 60 million tons. Well, they might be 160 million tons. So that kind of changes the stocks to usage ratio worldwide. And then I think USDA is still using what is considered trend yields for most of the world. And last week there was one analyst that thought instead of a 174 corn yield, given the conditions right now, we could have a record 182 bushel corn yield, which could add 600 million bushels to the carryout.
So Steve, the U.S. dollar's been gaining a little bit. Explain to our viewers why the U.S. dollar impacts grain prices and how.
I think two things. I think, you know, number one is that the higher dollar allows grain production to increase, like in Brazil and Argentina and the Black Sea, and so that could cut into our production. It also makes our exports more expensive, and so all in all, I think the higher dollar could reduce the demand for U.S. exports in the grains.
Let's flip over to the financials. Last week, the Federal Open Market Committee voted to increase its Fed fund rates by 25 basis points as expected. How many more rate hikes do you anticipate from the Fed this year, Alan?
Well, I do have a minority opinion right now. I believe that the Fed is only going to raise one more time. The majority at the Fed is predicting two more rate hikes. Many analysts, in fact, the majority of analysts are expecting two more. But I'm going to only have to go with one, and here's the reason why. The Fed cannot raise interest rates unilaterally on their own without other central banks around the world increasing rates as well. And it was just last week that the ECB said that they would probably not raise interest rates until the middle of 2019. Other central banks are in a similar position. They just can't raise rates as quickly as the Fed. So with that in mind, only one more rate hike, I think, from the Fed, and they are being held back from raising rates more aggressively, with other central banks not in a position to follow suit.
Are there still negative rates out there? Europe?
Yes, there are. Short-term rates are still negative in Europe and elsewhere. So that is still a very accommodative situation for the economy, very supportive. So in spite of negative rates, which from time to time people thought was an impossibility. There was a theory that rates could not possibly go negative, and yet they have been for quite some years. So yes, that is very much a consideration to look at.
And in light of the escalated trade tensions between the U.S. and China, flight to quality buying came into the T-bond futures last week, later in the week, and to a lesser degree today. Is this the beginning of a new bull market for interest rate futures?
No, it is not. And the reason is flight to quality, when we do see it, tends to last for several days for the most part. In fact, all of the flight to quality gains were given back in the last 2 or 3 weeks for the most part. So it also seems that as the global economy still improves, that is the dominant negative that will override and take the entire interest rate futures complex lower. Flight to quality buying from time to time will come in, but it is not the influence that will dominate markets.
Why did the NASDAQ and Russell 2000 futures advance to new record highs last week in spite of the ongoing global trade issues?
The news has not been good, as Steve mentioned. The trade situation very much with us as a negative, and yet the indices, the Russell 2000 and the NASDAQ futures last week, advancing to new record highs. So that suggests that the market sees some type of resolution to these trade issues. Whether it will be sooner or later, who can say, but the markets are predicting something good is going to happen, and that is why we're seeing record highs in the indices.
Now, one more question. I think these two indices, the NASDAQ and the Russell 2000, seem to be outperforming the Dow and maybe the S&P. Can you explain that to our viewers?
Right. The reason the Dow seems to be lagging is that the Dow is made up more of international companies, and the trade situation is somewhat more of a negative, as far as a negative impact on those types of companies. But I would not be surprised to see even the laggards performing well, the Dow and also the S&P.
Okay, thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.